The man on the phone has never met you. He doesn't know that you ease off the gas by the yellow school zone sign every morning out of pure habit. He doesn't know you've driven the same route to the same parking lot for 6 years without so much as a scratch on the bumper. He doesn't know you at all. He asks for your name, your address, your date of birth. Then he goes quiet for a moment while something loads on a screen you cannot see, and his voice changes. Not dramatically, just a small shift, a little less warmth. The tone people use right before they tell you a number that's higher than you hoped. And in that pause, before he says a word, a stranger has already decided exactly how much you are going to pay. That number is your premium. It's built by companies you've never spoken to, using files you've never read, scored by math they don't publish, and it decides how much it costs you to simply exist with a car, a house, a life. And here's the part nobody says out loud. It isn't mostly about how you drive. It isn't about whether you're careful. It measures something much stranger than that. Climb it with me. Rung by rung. Watch what the stranger sees when your name loads on the screen. Start at the bottom. The bottom has a name the industry uses when you're not in the room. Non-standard. High risk. Substandard. Picture the kitchen table last winter. The unpaid policy notice sitting under a stack of bills. The coverage lapsed for 2 months because the money went to the furnace instead. Picture the one speeding ticket on the fridge and the dented front bumper you never fixed from the fender bender. That was technically your fault. And your credit took a hit that same year. And yes, in most states, they are looking at that too. You feel like a normal person who hit a rough patch. The file feels nothing. You call for a quote and the number comes back almost cartoonish. Twice what your coworker pays. Sometimes 3 times. For the same car on the same road in the same city. So you do what people at the bottom do. You buy the thinnest coverage the law allows, the bare state minimum, because it's all you can afford, which means the one time you actually need it, you're underinsured and the gap comes out of your pocket. At the high risk tier, everything costs more and covers less. You pay the most for the least, precisely because you can afford it the least. The first rule at the bottom, the file doesn't insure the careful, it prices the doubted. And the less it trusts you, the more it charges you for the privilege of being doubted. Now climb 1 rung, except this rung still stings. You've been clean for a while now, no new tickets, you paid the lapse off. But the renewal letter lands in the mailbox with a single line highlighted near the bottom, a surcharge writing on your policy, a penalty stapled to your name, and it does not come off when you feel like you've earned it. It comes off on a schedule the company decides. 3 years, sometimes 5. You can almost see it on a calendar pinned to the wall, that single at-fault accident sitting on your record, quietly adding a percentage to every renewal statement, whether you remember it or not. And here is the thing you learn at this rung that will bother you for years. The surcharge doesn't care why. The person who is texting and the person who got rear-ended into a third car both file a claim. The file records the claim. It does not record the innocence. 2 people, same event on paper, same penalty, for years. You start doing something strange after this. You start not filing claims. The rock chip in the windshield, the dented bumper in the parking lot, the small stuff, you pay out of pocket to avoid the surcharge, which means you are now paying for insurance and paying for the damage, and using the insurance for neither. The rule at the surcharge, the file remembers what happened to you. It has no interest in whether it was your fault. Quick detour. There's a guy at your office named Derek. Derek has a spotless record. Derek mentions it, casually, the way some men mention their gym routine. Preferred rate. Never filed a claim in his life. Derek has a new truck, a big house in a new development, and a bundled policy that he brings up like a trophy. Derek is low risk. The file says so. Everyone can see it. Hold that thought. We'll come back to Derek, the standard tier. You're normal now. The surcharge finally aged off. Your record is clean. You sit at the kitchen table with the phone on speaker and a pen you don't end up needing, and the quote comes back, And for the first time, it sounds like a real number. The kind other people pay. The kind you can say out loud without wincing. The stranger on the phone is friendly again. No pause, no shift in the voice. But this is the rung where you finally sit across the desk from an agent, a real office with a computer screen turned half toward you, and you learn what they've actually been reading all along. You get curious and you ask the agent straight out how the price is calculated, and a good one will tell you. It isn't mostly your driving is one input. The rest is a profile, your credit-based insurance score, where you live down to the zip code, what kind of car you drive and who else drives that car, whether you own or rent, whether you've had continuous coverage or ever let it lapse, how likely someone like you statistically is to file a claim. Not you, someone like you. A person assembled from 1,000 other people who share your zip code and your credit band and your car and priced as if you are the average of all of them. You look at the screen the agent has half turned towards you, and it isn't a picture of your driving at all. It's a grid of little fields. Zip code, vehicle, home or rent, credit tier, prior coverage. Your whole life sorted into boxes a piece at a time, and not one of those boxes is ever written in the passenger seat while you drove. The careful hands at 10 and 2, the way you creep past the elementary school, none of it has a field on that screen. There is nowhere to put it. The rule at the standard tier. The file doesn't price your behavior. It prices your resemblance to strangers you'll never meet. The preferred tier, and here's what nobody prepares you for. Nothing happens. No letter. No congratulations. Things just quietly get cheaper, and it takes you a couple of renewals to even notice. You bought the house, you bundled the auto with the home, your credit climbed, you've had 6 years of continuous coverage with no gap, and the file loves nothing in this world more than continuity. The premium drops, and the company doesn't explain why, and you don't ask, because by now you understand the game. Your driving didn't change, your profile did. You call to add a car, and the agent doesn't do the careful voice, she just adds it, quotes you a rate that would have made you laugh 6 years ago, and thanks you for your loyalty. You are, on paper, the customer they want. Low claims, pays on time, owns things, predictable. The rule at the preferred tier, you never feel a good insurance profile. You only feel a bad one. A good rate is the absence of a weight you carried so long you forgot it was there. Above preferred, there's a rung most people never see, and it barely feels like insurance at all. The offers start coming to you now. Bundle the umbrella policy. Add the second home. A dedicated agent who knows your name, calls once a year, and treats a claim like a favor between friends rather than an interrogation. At this tier, when something goes wrong, the machine is gentle, the adjuster is polite, the check comes fast. The same company that fought a $300 claim from a high-risk driver 6 years ago writes a large check now without a single raised eyebrow. Picture the same event happening to two people. A tree comes down on a garage in a storm. At the bottom of the ladder, that phone call is an interrogation, a claims number, a fight over the deductible, and a rate hike waiting at renewal like a bill for daring to ask. At the top, the dedicated agent picks up on the second ring, calls you by your first name, says, "Don't worry about a thing," and has someone out to the house by the afternoon. Same storm, same tree, same company. Two completely different rooms, sorted by a profile neither person ever saw. You are the same person. You drive the same way you always did. But the profile next to your name says you're a low risk and high value. And low risk, high value is the most profitable thing you can be to a company that makes its money betting on people. And here's the joke the whole system tells with a straight face. It is easiest and cheapest to insure the people who can most afford to absorb the loss themselves. The people who genuinely need the safety net pay the most to stand on it. The rule at the top, insurance is cheapest for the people who need it least. Now, back to Derek. Derek of the Spotless record. Derek of the preferred rate and the new truck and the bundled policy he wears like a medal. Here's what the file shows and what Derek's confidence doesn't. Derek's profile looks clean because Derek is never filed. Not because nothing has happened, but because Derek, like you learned to do at the surcharge rung, has been quietly writing his own checks in the driveway, paying the body shop in cash for the dented tailgate, eating every small loss himself to protect the number. The number is a photograph, and Derek has gotten very good at smiling for the camera. Then comes the year Derek can't eat the loss, a kitchen fire, real damage, a claim too big to pay out of pocket. He files, the check comes, and then the profile turns. At renewal, the rate climbs. The next year, a second claim, a hailed out roof he couldn't have prevented if he tried, and the company does the math it always does. 2 claims in the window. The file reclassifies him. One carrier declines to renew him at all, and now Derek is shopping from a weaker position because a non-renewal is its own mark, and every new company can see it. Derek looked low risk because the file can't tell the difference between a man who has no losses and a man who has simply been paying for all of them himself. Nobody could, until he filed, which is the exact thing insurance is supposedly for. So stand back and look at the whole ladder, because from a distance, you can finally see what this number really is. It is not a safety score. There are careful, gentle drivers paying high-risk rates because of a zip code and a credit dip. There are reckless people paying preferred rates because they own a home and have never happened to get caught. It is not a fairness score. Picture the intersection, the driver looking down at a phone and the driver who got rear-ended into the car ahead, both standing on the same corner beside the same crumpled fenders. The file cannot tell them apart. It doesn't try to. What it measures is one thing: how profitable you are to cover, how likely someone like you is to cost them, weighed against how much they can charge you before you leave, how predictable you are, how quietly you pay year after year and file as little as possible. That's what the stranger is reading when your name loads on the screen. Not your driving, not your care, not your bad luck. Your profitability. So you're back on the phone, same company, same kind of stranger reading the same kind of screen, a man who has still never met you, who still doesn't know about the school zones or the 6 years without a scratch. He asks for your name. He goes quiet while the file loads. And this time his voice doesn't shift at all. It stays warm, easy, glad to help, because the profile that came back told him you're one of the good ones. Low risk, high value, worth keeping. You are exactly the same person you were at the beginning of this story. You brake at the same yellow lights. You take the same care you always took. The stranger just got told a different rumor about you. That's what your insurance company actually knows. Not how you drive, not whether you're careful, not whether the accident was your fault. Just how much it costs to bet on you, and how much extra to charge you if the bet looks bad. The number was never about you. It was always about them.